Hey, good afternoon, everyone. This is Sam, and I'll be doing the big wins and losses today here on Facebook for the next 30 minutes or so. Could you guys let me know if you can see video and hear audio? Just leave a comment in the field there, and that'll let me know that we're good to get started. Okay, guys, if you're able to see the video and audio, just leave us a comment there in the chat, and we'll go ahead and get started. Okay, I think we're good. I'm going to go ahead and get started here with the big wins and losses, kind of the lessons learned. So just let me know if you have any questions. Go ahead and put them in the chat if you have any questions. Thank you, Cody. Appreciate that. All right, so I think we're good to go ahead and get started. So let's go ahead and dive in. As we go along, if you have any questions, just feel free to put them in the chat. The volume is low. Let me know if that's any better. I think that's as loud as it goes. Aside from that, let's go ahead and get started. I do want to cover, this is kind of one of those, we're going to be sharing kind of battle stories, if you will. So we're going to be covering one where we had a really good win, not only for myself and my accounts, but for the room as well. We alerted these trades out. And then I'm going to cover kind of the opposite of that, where we had a very similar signal to the big win, but it was the inverse signal. It was the opposite signal, and I didn't take any action, and it actually ended up costing me. So we're going to start with the win first, and then just so that you can see the setup and kind of see what we look for, and then we'll move over to the lesson learned, if you will. Normally, my screen is right in front of me, like directly in front. For whatever reason, the one that's streaming is over here to the side, so you're going to see me looking over here to the side a lot. Not a big deal. We'll just go ahead and go from there. And I can see your questions as well, so if you have any, put them in the chat. Be sure to put them in there early. And also check out the link that's just been posted there by Simpler Trading. Before we dive in, I just want to let you know what it's about. There will be a link posted in the alerts or in the comments, and we're going to talk about it a little bit more towards the end of the session. But it's a completely free guide that we're offering, and it's my 5 biggest macro signals. So if you guys have been following us at all in the room or YouTube or wherever, you know that I like to look for kind of big picture signals that all come together, and that I think give me a really good read on the overall market. It's a lot of things that a lot of people don't talk about. So if you're interested in seeing what those 5 signals are, go ahead and click the link in the chat, and they'll hook you up with the free guide. It's completely free, and I definitely recommend it. So with that said, let's dive in. I'm going to start here with this chart, and this is going to be the big win. So a couple things here, just for anyone who's unfamiliar, who might be new to the system or anything like that. What we're looking at here, the box, is basically just where we got in. So we started getting in right there at the moving averages. Now, just a quick thing here. The green line on the charts is the 21 EMA. The blue line is the 50 SMA. Down here is the squeeze, which hopefully you're all familiar with, right? This is a big part of what we do here at Simpler Trading is following the squeeze and kind of looking for the results, if you will, from the squeeze. So just before we dive in here, the green line again is the 21 EMA. The blue line is the 50. You have the squeeze and volume, and I took off everything else just to simplify it. So this is an example of a big win that we had earlier in the year. I could show you the same chart looking at almost any semiconductor, but the one that we chose to play at the time was Texas Instruments TXN. The signal that we saw, and this is pretty key, even if you take nothing away from this time together that we have, just this next setup that I'm about to show you should be a setup that you can use your entire career. You just have to, you know, stay disciplined with it. But the setup is you try to buy when price is near the moving averages. So I don't remember exactly when we got in. This was a few months ago, but we got in somewhere in here at the moving averages. And notice how the squeeze here was rounding out, right? So the squeeze had a negative bias, right? It was going red. See how it's red? But it started turning around and going positive near the moving averages. When you see that, and it's holding the 21, right? So there's a couple things here, right? And I'm going to take some time to really deep dive on this because we only have 2 slides. So I think it makes sense to really do the deep dive. What do you see here, right? I know there's a bit going on, but you see how there's a box here, right? It's trading in a range, right? You see the trading range here, ping pong, ping pong, ping pong. But do you also see how even though it's in a box, it's still holding the moving average on the way up on a close? You see that? That is one of the strongest signals that you're going to see in the markets. And when you see that and you have a squeeze that's starting to write itself out, it could be a really big opportunity. So what we did at this point was we got into TXN here and we were looking for a move up. And I'm a fast trader, so when I mean a move up, I mean usually in about a week or less, usually no more than 2 weeks. So we ended up taking profits up here around 175. And not only did we have the TXN trade, but we also had a few others. We had some Qualcomm and we had a few other semiconductors. So the cool thing about the signal was we were seeing the signal on the semiconductors, and that's really the big picture. Again, kind of going back to the macro thing that we were talking about. We see the signal in the semiconductors as a whole, whether you use the SOX SOX or whether you use the SMH to gauge the semiconductors. And then from there, understanding that the entire sector of the semiconductors was looking good, then our job as traders is to find the setup, the semiconductor, kind of the needle in the haystack, if you will, of what semiconductor looks best, right? So just to write down the thought process, we started with SMH with this idea, and it looked very good. And then from there, we want to find the best thing to trade inside of this. And we found it here in TXN, I think. So this actually ended up being a pretty big trade. There was videos at the time that we were making that we were putting out, and we were calling them things like, you always double down on 11, because the setup was just really that good. So you want to go bigger in size than you normally would when you have a great setup like this, and we did. So we ended up getting in here, and we ended up getting out at 175. Took no time at all, and because we sized large, given the quality of the setup, it was a really meaningful trade. So if you have any questions about what we just talked about here, just in the past few minutes, throw them in the chat. I'll wait about a minute since I'm actually on a little bit of a delay, and I can't see exactly in real time what you guys are saying. And if you don't have any questions, we'll go ahead and move on to the lesson learned, if you will. But just the main thing is just remember that we're doing a very heavy focus on what is the moving average positioning as well as a squeeze. And then we'll dive into the lessons learned, so you'll see the opposite. So I'm just going to check the chat real quick. If you have any questions about what we just talked about, now is a good time to go ahead and ask them. I'll go another 30 seconds or so. Is anyone thinking about what they're going to eat later, or is it just me? I can't decide. I already eat whatever I want, so what do I do? Eat another steak? Doesn't sound that exciting when I do it all the time. I might eat something healthy just to mix it up. Okay, so I'm not seeing any setup. I'm not seeing any questions here on what we just talked about. Again, if you're just showing up, you can catch the recording of what we just spoke about. We just finished speaking about a really big win that we had, not just for my own account, but for the room, using the semiconductors as an example. So the next thing that we're going to do is we're going to look at the lessons learned. And basically, lessons learned just means a trade that didn't go as you wanted it to. And you'll hopefully see why. Okay, so here's the next slide. June, thank you for that. Let me make sure. Let me just confirm that real quick, and then we'll move on to the next slide. Give me just 1 second. Okay, so we'll work on that, June. I just pinged the office there. They'll hopefully take care of you there. So this is the next slide. Now this chart is the exact same, right? We're just going to go through it real quick. The green line is the 21. The blue line is the 50. The red line is the 200. And then, of course, we have the squeeze. Okay. So just so that everybody's clear on what this chart is, this is what I call the Fang Index. Now, what's cool about this, this is kind of something that I show in the room all the time, is this chart is a weighted index that's balanced for price that contains all of the Fang stocks. It also contains Baba and PayPal, Tesla. What else is in this thing? Obviously Microsoft, Apple, Netflix, Google, pretty much all the trillion-dollar companies, right, that really move the stock market. And um, my thought process is that if I could put all of these companies into a basket, essentially, and only look at the top companies, right? So just, if you look at the QQQ, for example, you're looking at a wide spectrum of tech companies, but they don't all really matter, right? If you compare something like very small to something like Apple, that's almost $2 trillion, Apple's going to be worth a lot more in terms of moving the markets. So my thought process was, let me get all of these trillion-dollar companies into one basket, into basically one ETF, and weigh it according to their market cap so that it's balanced, and then balance it for price so that a $3,000 stock like Amazon doesn't move it as much as say a $100 stock like let's say Apple. Um, so it's a really nuanced kind of thing. Simply put, though, the main thing to understand about it is this chart basically represents, in my opinion, the entire stock market, right? Wherever this chart goes, the stock market usually will follow. This chart tends to act as kind of a leading indicator, if you will. So the mistake here, and this is what we're going to talk about next, is I had the exact same signal that I showed you in the semiconductors, where you had moving average dynamics and a squeeze. But in this instance, unlike the semiconductors where we made a lot of money, in this instance, I didn't take any action, right? And because I was long the market and I didn't take any action on this signal, it actually ended up costing me a lot of money. And it was one of those things where I showed it in the room as well. Maybe some of you remember seeing this in the room, yet I didn't take any action, right? And it's one of those things as well when you see a signal that's this strong, and we're going to talk about why it's so strong here in just a second, you have to take action. Otherwise, what's the point of having signals? So let's dive in. So what's been the kind of the prevailing signal here? Well, by and large, the chart has been holding roughly the 50, right? We can kind of agree that it's been mostly above the 50 once I trace it in, and definitely kind of oftentimes it's above the 21, right? So oftentimes it's above the green line, but by and large, There's a few points here and a few points here, but it never made a fresh low. Never made a fresh low. Here it held. Here it kind of held. Okay, so by and large, it's holding the 50 pretty well. Now, what do we see up here? Well, you see how the moving averages are starting to pinch together, and you have the green and the blue, and there's really not a lot of distance between them. Unlike over here, there's a lot of distance. They start to narrow. Now, here's the real kicker. Obviously, because we are all students of the squeeze, we also had a purple squeeze. Now, the purple squeeze is a lot more dynamic and stronger, if you will, than the red squeeze. So, and this is a little nuanced, um, but the purple squeeze or the high compression squeeze, it tends to fire in the opposite direction of trend. It's a little bit of a nuance. We're still trying to figure out exactly why that is and kind of get some statistics around it. But when we see purple squeezes, they have a real habit of breaking against the trend. So what's the trend here? Well, the trend's been up, right? So what do we have? Well, we have a little bit of squishiness here on the moving averages, right? You see how it's starting to kind of break the moving averages a little bit here? Also, more importantly, you see how the squeeze here was flat here, and then it actually starts going negative, right? It's still purple the whole time. Each dot is purple, but do you see how the histogram is getting worse and worse? Right, I'll zoom in so you can potentially see it better. See how the squeeze is getting worse and worse here? So that's a big, big signal. Now, why is this so important? Well, because this actually ended up costing me quite a bit of money, actually. And it could have saved the entire room a lot of money as well had we all taken the signal. And the signal was once you break the 50 and your squeeze is getting progressively worse, understanding that this is your biggest compression squeeze and that there's actually 3 stages that it could fire through, you have to get out. At least that's by my kind of view of the market. Keep in mind, I made this chart to represent the entire stock market. So when the chart is giving us such a strong signal that it wants to roll over, especially at the highs with a high compression squeeze with a downward bias, nothing of what I just said is good, right? All of these things are bad. And at the very least, we should be flattening out our positions. It's actually, you could even go short, but at the very least, you need to flatten out. So the big mistake that I made was I held my longs. I was long into this, and I was like, well, I'm not really long tech stocks. I'm long things like I was long like agriculture at the time, right? So like CF, Mosaic, fertilizer stocks. I was like, well, I'm not going to get hit because this represents tech. I'm long fertilizer, no big deal. But because of the weight of these companies that this chart measures, it actually took the whole market down, and it did it in a big way. This was a very big move lower, and so by not following the signal that was right in front of me, using the very chart that I created, mind you, it actually ended up costing me a lot of money. So, two signals that are very similar here. I'm going to go back to the first one real quick. So you see how this one's the exact opposite signal? Here, you're showing obedience of the moving averages, perfect obedience of the moving averages, trading in a perfect range while obeying the moving averages, which is extremely rare. That only happens with the strongest of stocks. And then you have the squeeze forming positively. If we go back to the other one, we have the exact opposite. Here, price is rolling over and the squeeze is forming negatively. So basically two sides of the same coin. One that allowed us to make quite a decent return for our account, pretty much made our whole month, and for the room because there was some alerted trades on it. And then the second one that I didn't take any action on, that had I taken action on it would have not only saved me a lot of money, but it would have saved me a lot of time and mental capital that you use when a position starts going against you. So that's basically what I wanted to cover with you guys. It just kind of one of those. Basically, if you take away nothing from the session other than just the conversation around the moving averages and the squeeze, I think you're miles ahead of where you would be. There's a lot of little kind of nuanced things that we talked about. One of which was the signal that originally got us here was SMH. right? So if you'd like to learn more about how we use these big picture signals to then find these actual tradable stocks like this, then go ahead and check out the link that's in the comments. It's completely free. You'll get my 5 macro signals to watch for. I did take a good amount of time to put that together for you guys. It is kind of like my secret sauce, if you will, to understanding the markets. It's things that not a lot of people will tell you or talk to you about, but that are really, really important. And if you can get these 5 things on the checklist down, then everything else will be a lot easier. So if you liked what we talked about today, go ahead and click the link there, completely free. Check out the guide that comes with it, and I think it will really help improve your trading overall. So with that said, if you guys have any questions for me, let me know. Um, Again, I'm on a little bit of a delay, so I'll wait 2 minutes or so. If I don't get any questions, then we'll go ahead and dismiss class early. I'm seeing, as I wait for the questions, I'm actually seeing the potential for something equally good setting up here. So I'll leave you with a little bit of a trade for those of you that came here for a trade. Although, check out that guide that's in the comments. If I was in your shoes, I would really, really find that to be a very helpful guide. And it's free, so the price is right. So here's something that I was looking at in the room today. We were talking about what to look for in terms of the squeeze, in terms of the moving averages, and this was a position that we've been talking about for a while. You can see that the squeeze here is starting to form to the upside, and on a 2-day chart, you actually have a slingshot here. So this one kind of reminds me of what the semiconductors look like in the example that I was showing you, and then you have the clear upward bias here. So this is just something that we're playing around with in the room, and I think this goes significantly higher, potentially up into about 100. So hopefully you guys enjoy that. Okay, looks like a few you got the checklist. Awesome, awesome, good stuff. Yeah, I think you'll really like it. I think you'll really like it. You can always let me know what you think about it. I'm actually really curious, so let me know what you think about it. If there's anything that's unclear or that you would like a little bit more information on, just send me an email, sam@simplertrading.com, and I'd be happy to help. But I really think that in that guide, there will be some things in there that not everyone's going to talk to you about, and that really, really matter for the direction of markets. If you can understand those 5 things that are in the checklist, you're going to be years ahead of the competition. What ticker's on the screen right now? APPS, APPS. Just leaving you with a trade that we have open in the room that kind of fits the parameters of what we would look for a great trade. So I'll go another minute or so. I'm pretty lag behind here, so I'm like a few minutes behind on you guys. I'll go another minute or so, and then you guys can let me know what you're going to eat later tonight. I'm thinking sushi. I've been eating too much steak lately. Kind of want something healthy. Oh, awesome. Good to see you, June. Good to see you. That's awesome. That's awesome. I hope that was. I hope the course was helpful to you. The smiles and frowns that really caught on, and I hope that's been helpful to you. Um, it's a simple way of articulating a really complex idea, but if you understand the smiles and frowns concept, it goes a long way. Looks like a few of you like sushi. All right, guys, we'll go to the 30 seconds or so. Thanks again for stopping by. For anyone, again, who's just dropping in, feel free to check out the comment section for a free guide on 5 macro signals that I follow. And I think it's really going to help your trading. Completely free. All right, guys. So I'm going to go ahead and cut it off there. Again, if you came in late and missed the first part, this was recorded, so you'll be able to catch the recording at any time. Thank you for stopping by. I always appreciate you guys kind of stopping by after hours and giving us, another 30 minutes of your time. It's really appreciated. Hopefully, in the conversation around the moving averages, the squeeze, and then also the guide that's in the comments, you'll have something to take away from this, and not just something to take away from this, but something to take away from this that should last you a career. The cool thing about what we talked about in this session was it seems very simple, and that's by design, right? Oftentimes, the most difficult thing is to get something that's very simple but works, and I think we have that. The conversation around the moving averages, the squeeze, and then the guide that we're offering, I think will basically give you things that should last you an entire career, and that's a bit of a thank you for stopping by. So again, thanks for giving us an additional 30 minutes of your time, guys. I always appreciate it. And for those of you that are members, I'll see you in the room tomorrow. Have a great night, guys. Cheers.